Excellent. All right, folks. All right, everybody. Good morning. Grab your coffee. Good to see everybody. As I say every morning, share this thing. Hit that share button. Put it out to everybody. Sidrahar, you will be so happy. Colin, I've had Sidrahar as a founder of a company in San Francisco. Got a massive software engineering background. I think he's been on every single one of these, which is impressive. And he also asked some of the best damn questions that I've seen. So I'm expecting him to throw something out there. Don't be surprised. Everybody, good to see you. Grab your coffee, share this, hit the like button. Let us know where you're at in the world. We'll give you a shout out. Ask questions in the comments section as always, and we will get to every single one of them. So that said, why don't we jump right in? Good morning, everybody. Welcome to the 22nd episode of FinTech Insider, the breakfast show US. If you've been counting, we've been doing this since the first week of April now. This is the show for the folks on 11FS, bringing you interesting insights into the fintech and banking landscape. I'm Sam Maule, 11FS Managing Director North America. I'll be your host for this morning's show. For those of you that saw the show yesterday, you can tell why I'm wearing a nice shirt today. So I'm going to behave today as best I can. Do let us know where you're watching from. We'd love to hear from our viewers where you're based. And as always, ask questions. Share this live stream to those who aren't watching, and they should be watching. You already know that. Today, I'm happy to be joined by Colin Walsh. He's the founder and CEO of Varo Money. Today, we're going to talk about Varo Money's way of changing people's attitudes when it comes to money and the state of digital transformation in America. And Colin, you are in lovely San Francisco right now.
Yes, I am, and the sun is rising, so it looks like it's going to be a great day here.
It is San Francisco, so by noon it'll be raining, and then it'll be sunny, and then it'll be freezing. So that's how San Francisco rolls, and there's nothing wrong with that. Colin, if you don't mind, I do want to talk about your background a little bit because I find it to be so refreshing for what we would call a challenger bank in the U.S. And it's the fact that you come out of the banking industry. You've got an extensive background. Do you mind just touching on the different places you've actually worked?
Yeah, sure. I'm happy to give you some of the highlights of it. As you said, before starting Varo, I spent 25 years managing businesses within the kind of traditional retail financial services world. So I did 2 stints at Amex. And so before starting Varo, I was leading the consumer business over in Europe for American Express. I was at Lloyd's for a number of years, kind of all throughout the last financial crisis. So experienced some pretty interesting things in terms of being at the helm of some very large businesses, and as the UK was going through a pretty turbulent time. And then prior to that, I was here in the US at Wells Fargo for a number of years, and I'd done my first stint at Amex, and I actually started my career at GE Capital. So spent a lot of time kind of building products, turning businesses around, winding down businesses, buying businesses. So, kind of all kinds of different contexts in the financial services space. But I think the big theme was everything was very consumer oriented or small business oriented. And it was, all about trying to find solutions for consumers. Now, I think part of why Varo exists today is because those experiences really led me to a pretty strong belief that the incumbents and the incumbent system really struggles to provide quality banking services to a very large and unfortunately growing segment of the population. So if you don't have much in the way of financial assets, the big banks just struggle to make money. And so therefore, there's lots of fees and charges, and their cost structures just don't make it work. And so, my belief was you could bring a new bank into the world that had, a radically different cost structure, that could use technologies in very innovative ways and have a real impact on people's lives. And that is why I started the company. And it's also why, right from the get-go, I felt that we had to be a bank, and that innovating inside the system was going to give us a distinct advantage. And here we are, kind of 4 years in, and I certainly believe that. And we've gone from just an idea to having a real business, and we're about to become the first ever fully digital national bank in the United States.
So here's why I love Varo Money, and I love this story. And I've said this. I'm actually not sucking up that much to you right now. I've said this on other podcasts, and I've said this in our own. What I love about Varo, it's been a slow burn, if you will. And what I mean by that, and that's a compliment. It's been one of those where you knew what you wanted to be from day one. You knew you were going to pursue a charter. You knew you were going to go after that license. You knew that's how you were going to make revenue, right? That's how you were going to make money. And you never kind of lost focus on that. And you were patient through that process, because getting a banking license in the US, a national charter, is painful.
I mean, I've lost a few brain cells along the way, so it's definitely been a process. But it's the reward is worth the work, because it puts us in a place where we've got a business model that is really sustainable. We can offer a very broad range of products and really innovate across a broad range of financial products, and we can operate, as I mentioned earlier, with a real cost advantage, because we'll be on fully modern technology. We don't have, we're not sharing kind of the P&L with a sponsor bank, and so there's a whole series of reasons why it makes a ton of sense. But going from saying you've got an idea to actually making it happen, let me tell you, it's a long journey. But I feel like we're kind of really close to declaring some victory. I mean, once we open the bank, then that's a whole new reality, and then we've got we sort of reset expectations around what that's going to mean, and we obviously are working in a regulated business, and one of the unique things about Varo is that we're going to open a de novo at scale.
Yeah.
That's unprecedented, that you have a bank that starts day one. And, I mentioned, I think 6 months ago, that we had, 1 million users signed up, and, that number's almost double that now. So it's growing very rapidly. And so that is super exciting, but it also, it's a very unique dynamic.
So for listeners that are outside the US, and we always get a nice international flavor to this, we've got quite a few folks from London on right now, as a matter of fact. The process of getting a national charter is incredibly rough. And let me give you an example of this. Fifth Third is one of the largest banks in the US by far. They are just now applying for that national charter. So let that kind of sink in, if you will. What was that process like for y'all? What were some of the challenges, the biggest challenges you ran into?
Yeah, so going back to what we were saying, I started the company with this vision that we had to be a bank, but I also was pragmatic in the sense that that was going to take a long time, and so we knew we needed to get product in market. We needed to gain insights, start to build a customer franchise, kind of prove the concept, and so we did a partnership with the Bancorp Bank, and they've been great partners with us right from the beginning. And I was transparent right out of the gates that we're going to become a bank, and they were fine with that. I don't think they really believed that we were ever going to get there, but they were like, okay, that's fine. And so we kind of did two things in parallel. So we launched and kind of iterated and built a business. At the same time, we went and started talking to the OCC, which is the Office of the Comptroller of the Currency, which is the national bank regulator. And so we had our first conversation with them in December of 2016 and said, look, here's our idea. This is what we want to do. It's about collecting deposits, facilitating payments, making loans, all the things that national banks do, but we're going to do it with modern technology. We're going to do it through digital distribution, and kind of really kind of advanced digital capabilities. And they were intrigued, and they didn't kind of send us walking. They said, oh, this is interesting. I mean, we have to look at the organizing group, and the fact that we were practitioners and that we had real experience and we've been through multiple economic cycles and all of that, I think gave them confidence. We had strong investors, so they wanted to be confident that we'd be able to raise capital, and that we understood kind of risk management. And so that was the beginning of the conversation. And then we went and talked to the FTIC, we talked to the Fed, which ultimately led us to submitting our national bank application in July of 2017. So you can see we're kind of coming up on 3 years here. And so the first year was very much around them getting comfortable with us as an organizing group and saying, okay, if we're going to give these guys a license, are they good? They have to protect the safety and soundness of the banking system. So they had to have confidence that people like, myself and Wesley, who I think was on your show, and, someone on our board, or a group of us that are kind of the organizers of the bank, that we could actually do this and we can pull it off. And the other thing that they we're very focused on is the the path to profitability. And I think that
Yes.
having a business model that would be self-sustaining was critical for them, and certainly for the FTIC, because the FTIC, at the end of the day, I mean, their job is to protect the deposit insurance fund, and so they don't want to be issuing deposit insurance to a bunch of yahoos that are going to go and blow up a bank. And so they want to know that you're going to actually know what you're doing, and that you're going to be able to kind of steer this thing towards a profitable course. And so we spent a lot of time with the OCC. They issued us the preliminary approval letter at the end of the summer of 2018 with a number of conditions, like who we had to hire and kind of what the tech needed to look like in terms of some basic pieces of that, policies and procedures and the other regulatory approvals and the capital requirements and all of that. So we spent the better part of a year and a half just satisfying all of those conditions. And I think one of the big milestones for us was in February when the FDIC granted us our approval. And that was huge because, again, the FDIC it has a reputation of being incredibly thorough, somewhat conservative, and the idea of being able to grant deposit insurance to a national bank that's fully digital, it's really more, as much of a technology company as it is a bank. It was a pretty big watershed moment. And then so now we're just kind of in the final throes. I mean, the situation that's going on right now in terms of having a global pandemic wasn't something we had in our plan, but it's actually in many ways we're very well suited right now for this kind of growing age of isolation, social distancing. I mean, people are really evaluating many of the relationships in their lives, and not the least of which is their bank. And the fact that we're on the cusp of actually not only offering a fully digital solution that's helping consumers, but it's a full bank is actually very reassuring to a lot of consumers. And so the timing actually, in many respects, that has all kind of come together in some ways a positive way. I mean, not positive for the many millions of people that are struggling right now, but I think we are going to become a real credible alternative in the banking system and fill a very important, what I would call, white space in the banking system with what we offer.
So one of the things that I love, I already mentioned this, your background in banking. You talked about your COO, Wesley, who was also at Amex. I love the concept of, especially the challenger banks, having folks that came out of the industry, right? That understand, what it takes, for example, to go after a national charter. It's interesting. News came out today. Monzo just hired a former Amex executive to be their COO. That says a lot to me, right?
Who is it? I haven't seen that.
I'm going to slaughter this name, Sujata Bahati. And I probably slaughtered that, and I apologize to her to no end.
Name sounds familiar.
Yeah.
So,
Yeah, Amex is doing well. They're they're building the new system. But I do think that's important. When I had talked with Leslie, he had worked at Amex on the Bluebird side, right? The prepaid card that had come out. Your experience,
Wesley and I were colleagues. We didn't work that closely together because he was in the U.S. But we worked with, I worked with his group, Dan Schulman's group more broadly as they were introducing products into Europe. So,
So Siddharth has just given you a great question. I'm gonna go there because you and I had talked about this earlier. All right, I'll read the whole question, and then give you my thoughts real quick, and then I'll jump out of it. So Siddharth said, challenger banks believe that incumbents can be disrupted because they're charging too many fees, have old technology, and are disliked. Yes, but 10 years of well-funded challenger banks has resulted in incumbents charging more fees, becoming more disliked, and yet becoming even more successful. What have challengers, and we'll exclude Varo from this list, done wrong, or is it just need more time to prove out the thesis? So an interesting comment, and then I will jump out of the way on this, Colin. We have seen some numbers drop from Monzo and Revolut and N26 in the UK on adoption numbers. However, from what I understand, Chime and Varo, you guys are seeing an increase across the board in customers, right?
Yeah, I mean, we're seeing. So I'll answer your question, and then I'll jump into to the other question. So I think that first off, since this started in early March, all of our metrics are sort of off the charts. I mean, so everything is up and to the right. So we're seeing deposits flowing in from multiple sources. I mean, keep in mind that customers we serve, I like to describe them as sort of hardworking, everyday Americans. These are people that, even before this thing hit, are working hard to sort of stay in the middle class, to get by. Many of them were working multiple jobs. And, this is a group of people that have a lot of, goals and ambitions, but they unfortunately were on the wrong side of macroeconomic trends and just hadn't seen much wage growth, but expense growth kind of across the board. And so many of our customers actually work in essential services. So they work at Amazon doing deliveries. They work in Walgreens. They work at the post office. And so a lot of these customers still have income coming in. They also maybe had second jobs, and so they might be also getting some unemployment benefits. They're getting stimulus benefits. So we haven't seen any real slowdown in the flow of money coming in, and we haven't seen any slowdown. And if anything, we've seen an increase, and we've seen an increase in the money going out because the money is just moving through the system. And I think one of the things that Varo and other digital banks, and really all banks for that matter, can do to really help is keep money flowing. I mean, people need to have access, and they need to know that their money is safe and that it's accessible. And so that's something we've been spending a lot of time focused on. And at the same time, customer acquisition has gone up, and it was already going way up even before this. But people are just deciding that now actually is not a bad time to switch to a digital alternative. And I think where Varo really does have an edge is, as I mentioned earlier, we're about to be a real bank. I mean, we're OCC chart. We'll be an OCC chartered bank, and so there's that comfort that we're not just a kind of a fly by night sort of thing. This is like a real deal, and so that's been helping. And our cost of acquisition has come way down because I think some of it is this dynamic of people deciding to switch, and I also think that other advertisers have probably pulled out. So we're seeing positive dynamics throughout pretty much on all of our metrics. So it does kind of run contrary to what perhaps is happening in the UK and Europe with some of the challengers that have been out there a bit longer and maybe had taken bigger market shares, and now customers might be reevaluating whether they stay with the incumbent institutions. But going back to the other question, I think that long term, I do think there's going to be a substantial shift in the landscape, and to the point of like, well, fees have gone up, and the banks are still doing really well. They're doubling down on the segment that they serve really well, which are wealthier consumers. They've got multi-channel distribution networks that they've invested in. Particularly the big banks. They have decent kind of sort of omni-channel capabilities, but they're not this customer that we're serving, this everyday person that doesn't have a lot of money. They're the ones bearing the brunt of those fees and charges, where the banks are making money off of these affluent consumers that they're doubling down on. Now, the reality is it's sort of a bit of an innovator's dilemma that they're in, because over time, they keep alienating more and more of the population. The group that they're serving, that is kind of their cash cow that they can't afford to cannibalize, is going to shrink. And so, fast forward 10 years from now, you're going to have, players like ourselves that are going to be serving, very large customer franchises, and those customers will grow and mature and all the rest of it. And so I do think that the dynamics will change, and I think we're just at a point in time right now where the challengers are kind of establishing some roots and gaining some traction, while the banks have doubled down on their sweet spot, which is churning short-term profits. But I'm not sure what that's going to look like 10 years from now.
So great question from Dan in London. All right, Colin, ready for this one?
Sure.
Do you have a business or merchant bank on the roadmap?
Not right now. In the short term, I mean, we're very focused for now on consumer. I mean, I've spent a lot of my time in my career in small business. I started at my first job at Amex. I was in the group that ultimately became Open, which is the big small business area, but we were called Small Business Services at the time. When I was at Lloyd's, I was the chairman of the merchant acquiring joint venture with First Data. So it was between Lloyd's and First Data. And then at Amex, we helped launch small business in the UK, and we had small business in France and Germany and Italy. And so I mean, it's a segment that I really have a lot of kind of time for and a lot of respect for. But it's right now our focus is very much around there's just so many consumers in the U.S. that we can help, and with the charter we'll have quite a broad remit in terms of the types of products we can offer. So I think for the next few years we're going to have our work cut out for us just to continue to innovate in the consumer space. But I would never rule out longer term doing something in the business space, particularly the sort of SME SMB space.
Yeah. So again, I'm going to give you that compliment. What I love about Varo, I said it was a slow burn. I mean, it's only been 4 years. Which
yeah,
is,
we're right.
Take that as a right compliment.
I joke with people that like, 4 years ago we would be in my living room, and I'm like, oh wait, we are in my living room right now. But if this wasn't happening, we would, we'd be in an office. But it all started right here 4 years ago.
And it's what I like is the answer you just gave, which is the temptation to diversify, right? Is always there and to offer new products. But that concept of focus is so important, right?
So important. And, for us right now, I mean, we're going to have a lot of capital, we're going to have a lot of deposits. And so, so that temptation to sort of say, well, maybe we could do this, maybe we could do that. But I think one of the things, certainly from my years of experience, and this is obviously the first time I've started a de novo bank, but, I do understand that, we've made commitments to our regulators, and that part of that commitment is a roadmap and, a set of products and a business plan that we have to deliver against. And so, last thing we want to do is, hurt our credibility in terms of trying to deviate all over the place. And, I think we've been quite focused as a team. And I give a lot of that credit to the team of folks that I brought in, both, as you mentioned, some of the banking people that, you've met Wesley, but, there are other folks like Thibaut, my CFO, who was, he was one of the 4 global CFOs at BNP Paribas. He bought 30 banks around the world. He was the vice chairman at Bank of the West. I mean, he was like serious heavy hitter. But then alongside of some of the consumer tech people that we brought in, like, Smith, who was the former chief product officer at Acorns, and August, who, was the lead designer on Pinterest, and, Deep, who ran technology at Trulia. Like, these are like super smart tech people that's sitting alongside of the banking people. And so for all of us, it's been about, just kind of staying the course, being clear on what it is that we want to do, and kind of keeping our eye on the prize, which for me is creating something that is going to do a lot of good in the world. After 2.5 decades of managing these businesses in the old world, it's kind of like a little bit of, I joke that, we're kind of, some of us are reformed bankers. This is our opportunity to sort of give back and create something that could have a really culturally relevant, sort of powerful impact on society.
So Veronica with Truist in Atlanta, she has asked a really good question here. Do you see changes in client behavior due to the pandemic? So like the type of transactions, onboarding?
Mm-hmm. Yeah, I think that it's a great question. And I think that if you're going back to the comment about who the customer is that we're serving, like, these are not people that were taking expensive vacations and buying expensive retail. So I mean, they were living their lives. They were buying groceries and gas and paying their bills and maybe going to restaurants once in a while, or going to a concert. But like, these were not people that had massive amounts of discretionary activity going on. And so things haven't really changed. I mean, they're pretty resilient, and they're doing what they've been doing and paying their bills and getting by. I think that, many of them, 30, it's shocking. I mean, 30+ million people in America are out of work right now. I mean, like, you can't, it's just unfathomable. And so, being able to help them, again, by getting money quickly. We introduced sort of this instant Varo money transfer for people to help each other out, which has been proven very popular. We've been doubling down on partners that are helping people find additional work. So we've got a partner called Steady that is like a gig marketplace. We've got another partner in the works that's going to go live next week to help people find supplemental income. We've been making changes in terms of, we very quickly, within a week, refactored our remote deposit capture to be able to capture stimulus checks, physical checks. We've made changes to some of the criteria to allow people to access cash more easily to pay their rent. I mean, so we've been just doing a lot of things, like, trying to stay very connected to the needs of these customers and to our customer base, and letting them know that we're there for them, and that we're going to continue to innovate around the things that matter most to them. But we haven't seen sort of a wholesale shift in behavior per se, other than the fact that, people just need to know that we're going to be there for them and that we're going to help them through this crisis.
So a good question from Mimi Joy. She's the head of partnerships at the Financial Health.
Hey, Mimi. I know Mimi.
Yeah, so I think we're on a call later today, Mimi. Looking forward to chatting with you. So who is your target customer? And you've kind of touched on this a little bit. Do you have a strategy to help consumers with specific needs, such as older users and those with disabilities? Can you expand on that a little bit?
Yeah, I mean, our whole kind of reason for being is about financial inclusion and trying to help people across the spectrum. We had been doing some work and been thinking about things we were going to do from an accessibility perspective, particularly around people with disabilities. And August, who I mentioned earlier, who's our chief design officer, he himself is in a wheelchair, and he's one of the leading thinkers in accessible design. And there's a number of things that he's specifically working on that front. Right now, we're a little bit heads down trying to getting the bank open. So we've got a lot of our resources just focused on achieving that important milestone. But it is something that's very much in our thought process and on our roadmap. We do, when you're going back to who is the target customer, if I were to describe what I would call our archetype customer, or kind of like our golden cohort is the way we refer to it internally. She would be in her early 30s, had been working a couple of jobs, one, very much paying the bills, the other maybe more of a creative pursuit, was making, kind of in the 50-ish thousand a year across those two jobs, very likely a single mom. Could be African-American, Latina. So that's kind of like, now, obviously we've got many customers, so there are many that don't fit that exact description. But if you think about the customer that Varo was sort of almost custom built for, eliminating those hundreds of dollars of fees and getting the paycheck early and the no fee overdraft and the savings tools and the high savings rate and, the referral programs and all of these things that this person's like, wow, this is built for me. And that's the kind of archetype customer, but we do serve people across the spectrum. And we have a lot of customers that are maybe a little bit younger and just starting out, getting out of college. We've got people, we had one customer write to us and say, we've changed her life. And she said, I'm 77 years old. So, so we do serve people from like across the spectrum, but I think one of the things that have been really foundational for us, and I think Wesley may have talked about this on the show, is that, we've been so intently focused on listening to our customers and learning from them and taking those insights and innovating around them. And everything we build is based on, some insight that is going to help improve these customers' lives, whether it's, basics of helping them make their money go a bit further, or building some basic financial resiliency. And one of the things that I was talking a lot about, pre-COVID, was just how many people can't weather a financial emergency in their lives. And that's really coming into view right now. And so, trying to give them the tools and the incentives to save. And then, there's a whole nother, and it's going to be super relevant when we're on the other side of this, is people needing access to credit, needing to build credit, needing to repair credit. These are all, needs that are just so fundamental. And as a bank, we're going to be able to provide solutions across that spectrum. And so you think you'll see a lot of exciting stuff coming out of Varo, post bank open, to really kind of double down even further around serving a broad set of needs.
So we've got an entire list of questions we couldn't get to. We're going to forward them on to Colin and let him get to those. Outside of this, 30 minutes flies by. Folks, we've run out of time. I'm already late for another meeting. I don't want to go to that meeting, but I have to. Colin, thanks for joining us.
My pleasure.
What's the best place for folks to learn more about Varo?
Yeah, you can go to varomoney.com. You can download the app in the Apple App Store, Google Play Store. It's VARO Banking. So go to Varo Banking in either the app stores or go to our website and you can learn more there.
Perfect. All right, everybody. That's it for this week. Man, this week flew by. Follow us next week for the shows we got. We got a great lineup. On Monday, I'm joined by Gertie Diverschi from Flybits. Just slaughtered Gertie's name, but hey, by Monday, I'll have it really, really down well. Again, for me, you want to reach out to me at Sam Maule on Twitter, or if you know somebody to make a great guest or a topic you want to cover, reach out to us at podcast@11fs.com. Everybody have a great weekend.
Thanks, Sam.